This is Nightly Business Report with Tyler Matheson and Sue Herrera. Funded in part by...
All it takes is a spark. One idea to take flight. The courage to seek the unknown. To innovate, disrupt, to move us all forward. To explore a different perspective. At NASDAQ, we connect the world. Its ideas, its capital, its businesses, the people that drive global economies. The future isn't tomorrow, it's right now. All it takes is a spark. NASDAQ.
The simple message is the economy is doing well.
Well, the Fed makes its move. The central bank hikes interest rates, signals there are more raises to come, and the market liked what it heard.
Shifting gears, President Trump tells the auto industry he wants to make changes and hands them a fuel economy victory.
Tax scams, why the bad guys want to get their hands on your W-2s. Those stories and more tonight on Nightly Business Report for Wednesday, March 15th.
Good evening, everyone, and welcome. Interest rates are on the rise. Federal Reserve policymakers today increased a key short-term rate for just the third time since the financial crisis. The move is a sign that the central bank is confident about the outlook for the economy, but it's actually much more than that. The move will likely impact borrowers who are looking to take out a mortgage or finance a car. It could potentially help savers who have earned little interest for years. As for investors, many say a strong economy is good for stocks, and that helped lift the market today. The Dow Jones Industrial Average rose 112 points to 20,950. The Nasdaq added 43, and the S&P 500 gained 19. Hampton Pearson takes a closer look at the Fed's interest rate decision.
In arguably one of its most transparent moves in recent memory, the Federal Reserve Open Market Committee increased key short-term interest rates by a quarter point. The new range, 0.75% to 1%. It's the second rate hike in 3 months. Monetary policymakers cited a stronger labor market and improving overall economy as the primary reasons for the hike.
The simple message is the economy is doing well. We have confidence in the robustness of the economy and its resilience to shocks. It's performed well over the last several years. We've created, since the trough in employment after the financial crisis, around 16 million jobs.
The central bank's outlook for growth changed little, however. Policymakers predicting 2.1% this year and next before slipping to 1.9% in 2019. Fed Chair Janet Yellen signaled the most likely scenario sees monetary policymakers raising rates just 3 times this year. In recent weeks, Fed speak and stronger economic data raised concerns among market watchers there might be 4 rate hikes this year.
Policy is not set in stone. It is data dependent, and we're not locked into any particular policy path.
Markets rallied, with stock prices moving higher and bond yields falling as traders reacted to the Fed. In the hour after the decision was announced, the Dow was up more than 100 points.
The Fed is not going to kind of precipitate any kind of recession. They're not going to go too fast, but they're starting to get their groove. They're going to start raising. They've told us they're going to do what the market was pretty much expecting.
Today's statement was a little less hawkish than some had feared, and so we're seeing rallies in stocks and bonds.
Fed watchers think policymakers may wait until June for the next rate hike. By then, we should have a better idea of prospects in Congress for President Trump's plans for tax cuts, deregulation, and increased spending on infrastructure. For Nightly Business Report, I'm Hampton Pearson in Washington.
Stephen Whiting joins us now for more analysis on the Fed, the economy, and the market. He's Global Chief Investment Strategist at Citi Private Bank. Stephen, welcome. Good to have you with us. I'm curious, usually when interest rates go up, stocks tend not to like it. When interest rates go up, yields tend to go up. But today, stocks went higher and bonds went higher as the yields went lower. Why?
Well, I think there was a great deal of worry that the pace of tightening by the Fed would, in fact, ramp up even more. Janet Yellen, in her speech on March 3rd, suggested that the Fed was comfortable with the way the economy is unfolding, the way inflation and growth is unfolding. And yes, they have now tightened twice in 3 months as opposed to once in each of the last 2 years. But they're quite comfortable with where they are, and they don't feel that they've fallen behind the curve. And so the expectations that we would face a real interest rate shock faded today.
In other words, they would do the three that they've kind of projected, but not the fourth, perhaps, that many people in the market are now saying the economy may be strong enough by that point to withstand.
That's right. And the general uncertainty about the path of tightening came down today. Now, 9 FOMC members expect 3 tightening steps this year. So 2 more tightening steps this year is becoming more probable, but not some wild range. Including perhaps even more than 4 tightening steps. In past cycles, the Federal Reserve has tightened much more and much faster, and the Federal Reserve is signaling their comfort with their policy of continuing to raise rates very moderately and keeping the expansion intact.
And so we end up at the end of this cycle, 2 or 3 years from now, 2020, with a federal funds rate of what? About 3%? And what does that then imply for what will happen to mortgage rates and or savings rates?
Well, it means somewhat higher mortgage rates, but savings rates should ultimately move up a bit more. It does mean that the yield curve is likely to flatten some. The real questions aren't always answered, though, by the path of Fed policy. There have been business cycles, booms and busts, despite the Fed. You have to recall that in most of these economic downturns, the Federal Reserve has been cutting rates into them, and it's usually because of some unrecognized problem. But the Federal Reserve is not going to cause that problem if they continue to go at this pace.
What about fiscal stimulus and stimulus from the Trump administration's proposed agenda? How might that factor in, assuming that the administration gets most of what it is asking for? How does that, or does that, factor into the Fed's actions?
It can and will factor in, as Chair Yellen mentioned. However, the position that they are in right now, with complete uncertainty about what exact policy proposals will go before the Congress and the likelihood of passage, the certainty about that just isn't there now. Whether there are offsets, whether this is a tax reform or a large tax cut, those pieces of information are missing at the moment.
Stephen, thanks so much for your help tonight. We appreciate it.
My pleasure.
Stephen Whiting with Citi Private Bank.
After today's rally, stocks are once again sitting near record levels. But no matter how high stocks go, investors are always on the lookout for a potential correction. And at these levels, a typical pullback could look pretty steep. Bob Pisani explains.
Are you ready for a 2,000-point drop in the Dow Jones Industrial Average? That's what a normal correction would look like right now. Normal corrections look kind of scary when the markets are at these highs. So think about this. The Dow hit an all-time high on March 1st. It was 21,115. That means a 10% drop. What would be considered a normal correction would be a decline of 2,111 points. That sounds pretty steep, doesn't it? Here's an even bigger drop, 3,000 points. Over the past 30 years, the stock market has declined an average of about 14% from high to low on an intra-year basis. That's according to advisor investors. That translates to a roughly 3,000-point decline from the Dow's March 1st top. Finally, March 9th was the 8th anniversary of the bottom of the market. It was widely noted that the S&P 500 was up almost 250% since then. But it's up even more than that, over 300% if reinvested dividends are accounted for. That's the power of compounded interest and staying in the market. That's about a 19% annual compounded gain every year for 8 years. Now think about that. Your money would be up an average of almost 20% a year when dividends are included, and the money is reinvested over the last 8 years. That is a remarkable run. Can stocks gain 20% a year for the next 8 years? Well, maybe, but I wouldn't necessarily count on that kind of run. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.
And neither would I. To the housing market we go ahead of the spring selling season. Home builders are feeling much more optimistic about their prospects. The National Association of Home Builders says sentiment surged to a 12-year high this month, exceeding expectations. Builders' view of sales prospects now and over the next 6 months increased, as did a gauge of traffic by prospective buyers.
Consumer prices saw their biggest annual increase since 2012. The Consumer Price Index for the month of February was tempered, but over the past year, prices have risen by more than 2.5%. The increase being driven by housing costs and the price of medical treatments. Today, the Federal Reserve Chair, Janet Yellen, said inflation is rising towards the central bank's target.
The Justice Department has charged 4 men, including 2 Russian spies, with hacking Yahoo. Federal prosecutors allege that the suspects hacked into Yahoo's system to steal information from roughly 500 million customer accounts in 2014.
With these charges, the Department of Justice is continuing to send the powerful message that we will not allow individuals, groups, nation states, or a combination of them to compromise the privacy of our citizens, the economic interests of our companies, or the security of our country.
This marks the first time the U.S. government has issued criminal charges against Russian officials for cyber attacks. Yahoo says it appreciates the FBI's investigative work and that it is committed to keeping its users secure.
Still ahead, a big win for the automakers.
Is it time to change the regulations when it comes to mileage vehicles get? I'm Phil LeBeau outside of Detroit, where President Trump is calling for a review of the fuel economy standards. That story coming up on Nightly Business Report.
General Motors plans to rehire some Michigan assembly plant workers who were to be laid off in May. The automaker will add 220 new jobs to one plant in the state, and it will eventually hire back or redeploy 680 of the 1,100 laid off workers at another factory in Michigan.
President Trump is reversing rules pushed by the Obama administration to have cars and trucks get substantially higher mileage by the year 2025. It's a change the automakers have been calling for. They say the higher fuel economy requirements drive up their costs and force them to build the types of vehicles that Americans are not buying. Phil LeBeau has more from Ypsilanti, Michigan.
In front of several thousand auto workers, President Trump said it's time to review mileage requirements, driving up the cost of cars and trucks.
We're setting up a task force in every federal agency to identify and remove any regulation that undermines American auto production and any other kind of production.
What President Trump wants to review are the Obama administration's rules requiring vehicles built by 2025 to average 54.5 miles per gallon. Automakers say those rules were written assuming gas prices in 2017 would average $4 a gallon and keep rising. But with prices at the pump well under $3 a gallon, Americans are buying more trucks, SUVs, and crossovers, which will struggle to meet substantially higher fuel standards over the next decade.
Remember, we were in 2012 making decisions and looking at how we could make improvements out through 2025. To take, a pause in 17 and 18 and say, okay, what's happened? What does the customer want? What's happened to fuel prices? What has happened from a technology perspective? It makes a lot of sense.
Ultimately, automakers should see their costs come down if fuel economy targets are lowered, which is what many on Wall Street have been expecting.
We felt that the standards for fuel economy were already so ambitious that irrespective of who was in the White House, which administration, that they were likely going to be graded out, delayed, softened a bit, at least in the intermediate years.
For President Trump, this stop in Michigan allows him to push 2 messages. For voters here in Michigan, he can say that he's helping automakers lower costs. And for others around the country, he can say he's keeping a campaign promise to lower regulations. Phil LeBeau, Nightly Business Report, Ypsilanti, Michigan.
Oracle continues its strength in the cloud business, and that is where we begin tonight's market focus. The computer technology company, software firm really, saw profit rise and beat estimates while its sales rose thanks to an increase in the company's cloud products. But overall, revenue was just shy of estimates. The company also raised its quarterly dividend from 15 cents to 19 cents a share, and shares initially popped in after-hours trading. They finished the regular session up a fraction at $43.05. The clothing retailer Guess reported higher revenue, saying strength in the company's Europe and Asia markets helped offset ongoing weakness at its locations in the Americas. But those results still missed estimates, as did the company's profit. Guess also gave some disappointing guidance for the current quarter, and that sent shares initially tumbling after hours. They did, however, end the regular session up 1% to $12.23. Watch them tomorrow. The camera maker GoPro said it would cut its workforce by 270 employees in an effort to lower operating costs by $200 million this year. The company also said it expects earnings for the current quarter to come in at the high end of its outlook. GoPro up 11 cents to $7.35.
Home furnishings retailer Williams-Sonoma reported revenue and same-store sales that missed estimates, but the company's profit came in ahead of expectations. The owner of Pottery Barn also gave guidance for the current quarter and full year that was a little light, but still the company raised its quarterly dividend 5% to 39 cents a share. Shares initially rose after hours and also ended the regular session up 1% to $48.12. Arcos Dorados, which is McDonald's largest franchisee, said marketing initiatives and lower costs helped the company post stronger profit and revenue. The largest restaurant chain in Latin America also reported a rise in same-store sales and said it plans to open 180 more McDonald's over the next 3 years. And that news sent the shares up by 19% to $7.60.
No executives have their finger on the pulse of American business quite the way chief financial officers do. And tonight, CNBC is out with a new survey of CFOs. Jackie DeAngelis tells us what they're seeing and worrying about.
And the survey says global CFOs are concerned about some of President Trump's key agenda items, as well as the Fed. CNBC's Global CFO Council survey reached out to CFOs of some of the largest companies in the world. Together, their companies are worth more than $4 trillion. Now, most of the leaders say that they're less than 50% confident that we're going to see corporate tax reform, repatriation, and infrastructure changes this year. Nearly all that were surveyed said that they were worried about a trade war with China. A handful see U.S. trade policy as the biggest external risk to their business. In terms of Fed expectations, the majority still see 2 rate hikes this year, but there was a little bit of a shift in the thinking. More were open to the idea of additional hikes. Actually, about a quarter now believe Janet Yellen may hike 3 times. That number more than double from the last survey. Despite the expectation for rising rates, the majority, though, still bullish on stocks in the global economy. They note that we could see more record highs ahead. For Nightly Business Report, I'm Jackie DeAngelis.
As Jackie just reported, the nation's chief financial officers are indeed concerned about a trade war with China. China is concerned about the same thing. That country's premier said so himself today at the end of the annual meeting of China's parliament. Eunice Yoon tonight in Beijing.
The Chinese premier sent a clear message to Donald Trump that a trade war cuts 2 ways. The premier warned that if the U.S. were to follow through with protectionist measures, then foreign companies, and especially American ones, can bear the brunt of those actions. American companies have long seen China as an important market to them. And he said that, yes, it's true, American companies have outsourced manufacturing to China, but that the bulk of the profits go back to American firms. He also commented on globalization. He said that he backed President Xi Jinping's view that China would become a defender of freer global trade. However, he was a bit cautious about Beijing's commitment to that international role.
For regional trading arrangements that concerns China and where conditions are in place, we would have an open-minded approach to it, and we would be ready to work together with others to push them forward. But China has no intention to overreach itself into areas where its dual role is not in place.
The premier also weighed in on the heightened tensions on the Korean peninsula after the missile tests by North Korea.
So what we hope is that all the parties concerned will work together to de-escalate the situation, get issues back on the track of dialogue, and work together to find proper solutions. It's just common sense that no one wants to see chaos on his doorstep.
The threat of North Korea is likely at the top of the agenda when Secretary of State Rex Tillerson comes to this part of the world for meetings with Asian leaders. He's going to be touching down in Beijing on Saturday. For Nightly Business Report, I'm Eunice Yoon in Beijing.
Coming up, is your tax information for sale on the dark web? What you need to be aware of this tax filing season. The White House tomorrow will release its budget blueprint. The New York Times reports that the president will propose steep cuts for the EPA and the State Department. He will also propose to eliminate the Transportation Department program that subsidizes flights to rural airports.
Early exit polls give the Dutch Prime Minister a big lead over his far-right rival. The election, which is the first of many across Europe, was viewed as a test of the European Union and of the rise of populism. In response to the exit polls, the euro touched its highest level in more than a month.
Well, it's tax season, if you didn't know that already. If you haven't filed your taxes just yet, you're not alone. And there are a few things filers need to be aware of, including fraudsters, cyber criminals, cashed in on nearly $2 billion worth of fraudulent refunds last year. They're becoming increasingly sophisticated and brazen. Andrea Day has our story.
Your W-2 could be for sale on the dark web. IBM's Itay Mayor took us into the secret stores criminals use to buy and sell private information.
You name it, they'll sell it.
The stores look like legitimate websites and even include ratings for sellers.
I've created a model that you can trust in an untrusted environment.
And he says this season, a rush on W-2s, like these for sale right now.
It says it's people with high wages, so you should have higher tax returns.
So how do the bad guys get their hands on your W-2? In one scheme, according to Mayor, they send an email that looks like it's from the IRS or a tax provider. But if you click on the link, you're just giving data away.
We've actually seen a 400% increase in the number of emails going out that have tax scams.
In another plot, they pretend to be a top exec at your company. IRS Commissioner John Koskinen.
Someone in an HR department or a finance department get what's looked like an email from the CEO saying, I need all the W-2s for our employees, just send them along to me.
Armed with the info, cyber criminals can submit W-2s to the IRS and claim the refund even before you file. And there's more. Mayor says the undercover crooks are also sending emails that look exactly like the tax return you've been expecting. But
if you click on that, you get infected. And you infect yourself with a form of malware that can do anything from harvesting your banking credentials to stealing personal information to locking down your computer, ransomware style.
According to the IRS, these types of frauds are growing. But there's some good news. The IRS says it's getting better at figuring out what claims are legit before money is handed over to the swindlers.
We can tell if a computer is being used to file 30 returns, that's probably a false set of returns. That's by a criminal.
And the best advice? Never click on any link, even if the email you got looks legit. Go straight to the website instead. And if you get an email that looks like it's from the IRS, delete it. They'll never send out an email or ever contact you by phone to collect a debt. The agency relies on good old-fashioned snail mail. I'm Andrea Day for Nightly Business Report.
That's interesting. The IRS never sends an email.
I know. That's good to know.
That's good
right?
to know.
All right. On that note, news you can use. That's Nightly Business Report. I'm Sue Herrera. We want to remind you this is the time of year your public television station seeks your support.
I'm Tyler Matheson, and we thank you for your support, and we'll see you back here tomorrow.
Nightly Business Report has been funded in part by...
All it takes is a spark. One idea to take flight. The courage to seek the unknown. To innovate, disrupt, to move us all forward. To explore a different perspective. At NASDAQ, we connect the world, its ideas, its capital, its businesses, the people that drive global economies. The future isn't tomorrow, it's right now. All it takes is a spark. NASDAQ.